All right, 2025 was a nightmare for most people in real estate investing, and there's going to be some big changes in 2026. And so in this episode, I'm going to unpack it all for you and help you to understand how to make better decisions going forward so you can have a profitable year real estate investing in Canada in 2026. We're going to get right into it after this.
Hey, my name's Ken Dunn, and I'm a real estate investor. I want to welcome you to the No Money Real Estate Podcast. On this show, I'm going to interview elite level real estate investors from all over North America. And I'm going to help you to see one thing that all successful real estate investors have in common. They built their portfolios without using a dime of their own money. I've got a portfolio of $300 million in real estate. That includes resorts, apartment buildings, commercial buildings, and I built the entire portfolio without using a dime of my own money. Real estate is a business that anybody can get into, but the strategies that those tight real estate investors use to build massive portfolios have been kept secret for decades. Now, because of this show, I'm going to reveal them to you. So let's get started.
All right, here's the first thing I want to know. Go into the comments of this video and tell me, are you glad that 2025 is ending? I can tell you honestly, I am. There's been a lot of changes in this last year that were brought on by the economy in general, and a lot of those economic circumstances that we're now dealing with as real estate investors happened because of a U.S. presidential election. And it's been really, really hard just to keep up with all the changes that are happening. I've talked to hundreds of real estate investors over the last year who were all stung by the downturn in the economy. You wouldn't believe the amount of people. We're talking from average mom and pop real estate investors who own a couple small little multifamily projects to the major corporations that exist in this country. Most of the real estate market in Canada was hit by a devaluation where the price, the value of properties has gone down. And in some markets, 30 to 40% it's gone down. And this caused major changes and upheaval. Some of the examples of that are like major developers who literally stopped, if not paused, projects where they were building apartment buildings and condo buildings and all of these things because of the devaluation of real estate. They just didn't make any sense anymore. People were going to lose a lot of money, so they shut down projects. We've seen more projects get shut down in the last 12 months in Canadian real estate than we've seen probably in the last 12 years. It's been that horrific, but nobody's giving up. The big companies would never give up. They have too much on the line. So everybody has been digging deep into what we believe is going to happen in the next 12 months. And if you really are serious about getting into real estate investing, this could be the best time for you to do it. Now, as an overview, let me just tell you right up front, none of us that I've talked to believe we're going to see a major change in 2026. We're going to see a lot more of the slow churning real estate market over the next 12 months. But there's never a bad time to get into real estate investing. With these prices as low as they are and the market moving as slowly as it is, it's a great time to buy. But when you're buying properties right now, you have to have a true belief based on data of how long this slowdown is actually going to stay in the economy. When you're looking at properties, it's going to be more important than ever to know how to underwrite these deals properly. And if you're buying anything right now that you're going to do a buy and hold strategy, like a small apartment building or a commercial property, you really need to underwrite your deals for the worst case scenario. So when you're looking at buying something in real estate right now, in terms of underwriting, you want to make sure that you're looking at these properties and you're determining how long you're going to have to carry something at a devalued price. See, the other side of it is what we can see in the market right now is we're probably looking at another slow year in 2026. The Bank of Canada is going to be forced to drop the interest rate more in the coming 12 months. But what's going to happen in 2026 is a turnaround. There's going to be something happen. We're suggesting or predicting that it's going to be in the third and fourth quarters of 2026, so the fall. But by the fall, you're going to see an upturn in the market. That means values are going to start to come back. We don't know if we're at the floor yet. A lot of people think that values are still going to come down more, but in the last quarter of 2025, the quarter that this video was produced in, we're already seeing in some markets values are responding. We're seeing more people buying. So that's an early sign that tells you we're on the right path. That's probably the biggest indication that we have where we've created this belief that we're going to see more troubles in the first 3 quarters, but you're going to see a change start to happen in the last quarter of 2026. The other thing that we really want to pay attention to, as you guys have seen from my company and many companies like us, we're creating a lot of content right now where we're encouraging, if not demanding, from municipal and provincial governments that they start making major changes to approval processes. And from all indications, that work that we're all doing together, where we're pushing and we're publishing content and we're just getting the word out and forcing them to look at it, it's working. We've seen 3 different municipalities in Ontario, Canada's biggest market, where these municipalities are now calling for people to help them implement AI strategies, implement new strategies for shortening the approval processes. And when you see individual municipalities that are starting to ask for help in those areas, that's a big sign. What that means is, if those 3 municipalities are now openly asking, dozens of other municipalities are actively investigating. And that's where it all starts. Nothing in real estate investing is going to happen overnight. It's not going to happen quickly. But when you start seeing these signs, you can make logical assumptions that things are going to change. And when we look at this big change, we believe that's going to happen in the fall of 2026. The indications that we look at to make that type of prediction are what we see happening with the Bank of Canada right now. What did you guys see? We saw the interest rate from the Bank of Canada drop by over a full percentage point in 2025. Now, in the most recent quarter, they held the rate the same, but that doesn't mean they're finished lowering the rates. Because if you look back at what caused this issue in 2021 and 2022, interest rates at the beginning of the pandemic hit historical lows. They literally got down to as low as they've been forever. And when those historical lows were hit, it spurred significant buying in the market. The real estate market went crazy. But the challenge was, in 2021, record numbers of people bought properties at these crazy low interest rates, and they took 3 and 4 and 5-year mortgage terms. Well, those mortgage terms are now renewing, and people are losing properties. That's why you're hearing about more foreclosures and more bankruptcies happening right now. It's because of those interest rates. Well, the Bank of Canada sees that, and they know that's going on. And that's one of the major things that's spurring their conversations internally. And if that's the case, then some of you guys are going to ask, why did the Bank of Canada not drop the rate another 25 basis points in this most recent announcement date? It's because there were other factors in the market that showed there are changes happening. There were more jobs created in Canada in the last quarter of 2025. There were more projects started in Western Canada in the last quarter of 2025. So the Bank of Canada looked at that and said, well, there's some early signs that things are turning around. So let's not reduce the rate now. But what they're going to start to see, or they're going to continue to see in the first quarter, is that it didn't do enough. Rates are going to come down again. Rates are going to continue to drop in 2026. And as those rates continue to drop, we're going to hit an inflection point where it's dropped low enough, and it's going to spawn the rebirth of the real estate market, purchasing of homes and selling of homes. It's all going to pick up. And that's why we think it's going to be in that last quarter of this coming year. Now, there's some other things I want to talk to you about. For the new people that are thinking about getting into real estate investing, 2026 is a great time to do it. But there's certain things you should be looking at doing. There's certain types of real estate investing that are really great things to be focusing on in the coming year, and there are some things that it's probably not a good enough time to get into it again. So let's start with the good news. If you want to get into real estate investing right now, the government of Canada, municipalities have made it easier than ever to get into multifamily real estate. Now, I don't know if you've heard this or not, but we're dealing with a housing crisis in Canada. It's in the news. We all agree with it. We all know that it's happening. And so because of that, the government of Canada, through its corporation, CMHC, the Canadian Mortgage Housing Corporation, they decided to implement MLI Select. Now, this program started a couple years ago, but there were some slight enhancements to it in this year that showed they're going to continue with that program. So what that means is the government will help you to build an apartment building or buy an apartment building and renovate it at ridiculously good interest rates and terms. So you can go out and buy an apartment building right now, and the government will insure a mortgage for you so you can get a bank to lend you 95% of the money to do it. We've never seen this before, and we believe that CMHC is going to continue to offer these financing strategies through 2026 into 2027, which means if you're thinking about getting into real estate investing, a great way to do it would be to buy a 5-unit apartment building or more. Why 5 units? Because in the CMHC rules for MLI Select, they've indicated that they will start financing and they will lend you the money on any buildings that have more than 5 units in it. What they believe is if they're going to offer these types of lending rates, they've got to do it at a level that is going to get more houses for people to live in. So that's what they've decided it is. It's 5 units. So if you're thinking of getting into real estate investing, or you're trying to figure out what you should focus on in the next 12 months or going forward, look at multifamily real estate and look at buildings that are more than 5 units. There's lots of municipalities right across this country that are changing their rules and make it easy to build 8-unit buildings. 8 units are a really great point to get into this at and to think about, because they fit into MLI Select's program, so you can get the financing for it, but also it builds enough homes in one building that you can cash flow it and it will work for you. One of the municipalities that I want to really talk about right now is Edmonton, Alberta. In Edmonton, their municipality is doing amazing things. Everybody, if anybody's listening to this from the town of Edmonton, the city of Edmonton, in your planning or building department, I've heard, and you can confirm this for me, that in Edmonton right now, if somebody goes and builds an 8-unit building and they get architectural drawings for it and they submit it to the city and they get it approved, if they finish that project and they find another project and want to do the exact same thing, the city of Edmonton will fast line that process because they already have the approved drawings on hand. So if that same builder goes back to the municipality and says, we want to build the exact same building with the exact same plans in this different location, they won't do a full review. They'll say, okay, we have these architecturally stamped plans. If you're using the same architects and you're going to do the exact same thing, we'll do a fast track approval for you on that. And that's an amazing move by Edmonton. And I want to have a huge congratulations to everybody. Let's have a big round of applause show up on the screen right now, because those people really deserve a little bit of credit for what they're doing. So if you're thinking about getting into real estate investing this year, think about multifamily. Now, I've made other videos recently and I've had other podcast shows recently where I've pointed out the fact that a lot of real estate investors in the province of Ontario are now moving out to Alberta and building buildings out there to participate in that investor-friendly market. And that hasn't been missed in the province of Ontario. The Premier of Ontario, Doug Ford, recently passed some amendments to their Tenant Landlord Act and their tenant landlord processes. It was called Bill 60. They shortened how long it takes to get into a tribunal setting. They made it more fair for investors, meaning that if a tenant has a complaint, they have to pay their rent before they can make a complaint. So there's some really good things happening. And that tells us that there's going to be more coming. So people that are interested in building apartment buildings and doing stuff in Ontario, it's going to get better. You can look at that. Next thing I want to talk to you about is my favorite type of real estate investing, short-term rentals. Short-term rentals, from all accounts, are a great thing to get into right now. And I'm going to give you a couple reasons why I believe that's the case. There has been a major movement by Canadian people to take vacations in the country rather than traveling abroad. If you look at what's happening in the market right now, primarily because of what happened with President Trump's mandates and his rules, more people than ever are refusing to travel to the States. It's in the news right now. We're talking holiday travel is down 30%. Do you know what those Canadian families are doing? They're vacationing in Canada. We have a portfolio of 11 short-term rental properties in 4 different provinces in Canada, and we are seeing record occupancy. Our portfolio is now booked at 90% of capacity. We've never seen anything like this before. We're making more money with our short-term rentals than we ever have. And that's not going to change anytime soon. President Trump is in office for another 3 years down there. So if you're thinking about getting into real estate investing, here's another thing you could do. Go find an old dilapidated cottage. Cottage prices are down significantly because of the downturn. Buy that cottage using private capital, renovate that cottage, increase the value of it, refinance it with a credit union, and get into short-term rentals. If you're going to do that though, make sure that before you buy a property, you check with the municipalities and make sure it's a short-term rental friendly area to do that type of real estate investing. So those are 2 really good things that you could get into that are safe and that are going to perform well in 2026. Some of the more popular ways to invest in real estate aren't going to do as well in 2026. And the one that's in my mind right now is house flipping. In 21, 22, and 23, house flipping was an amazing idea. There was enough people buying homes. Prices were down low enough that you could buy an old property, renovate it, and sell it again quickly and make $100,000. In 2025, because we saw that radical drop in the value of homes, a lot of people doing house flipping got hurt because before they could finish doing the renovations, the value dropped and it screwed up their whole strategy. Friends, it really looks like, especially in the first 3 quarters of 2026, that trend is going to continue. Listen, doing house flips is always going to make you money if you do it the right way. But if you're going to do a house flip in 2026, underwrite the deal properly. Don't do it unless you can see $200,000 to $300,000 in profit in it. So that way, if the market continues to drop, even if you start to lose that end value, that ARV value you're looking for, it comes down. You'll still have enough profit built into your underwriting that you'll make money. So the only way I would suggest somebody gets into house flipping right now is if they really pay attention to their underwriting and they make sure they do it. So if you're thinking about getting into real estate and investing in 2026, I want to tell you about a really special event that we're doing. Our company is hosting an event called Succeed in Real Estate Investing in 2026. This is an online virtual event, so you can join us from the comfort of your home. It's 2 days, January 10th and 11th, Saturday and Sunday, from 10 o'clock in the morning Eastern Standard Time to 4 o'clock in the afternoon Eastern Standard Time. So if you're in Vancouver, if you're in British Columbia, you're going to get up early that day. It starts at 7 a.m., but we've structured this in a way that anybody from Canada can join us. We're going to talk about all the trends we believe are going to become popular in 2026. We're going to show you how to underwrite deals for this time in real estate investing so that you can bulletproof yourself against things that can go wrong. We're going to deep dive and tell you all about MLI Select and the government programs and how you can buy apartment buildings with the government's money. We're going to talk about short-term rentals in detail and how you can take advantage of that. We're going to reveal for you a strategy that you can use that very few real estate investors know about this, where you can guarantee yourself that you can buy properties significantly undervalued and ensure that you can make more money in real estate in 2026. Now, here's the best part of this event. We're only charging $1.99. If you are a real estate investor and you're looking to learn more about how you can raise your own capital, come to this event. If you want to get into real estate investing and you want to know the details of multifamily real estate and how it works and how you can buy buildings with no money, come to this event. Bottom line is this: if you have any interest in being a real estate investor in this country, or if you are one, start your year the right way. I've put the link to the Succeed in 2026 event in the notes of this show. Click on that link, pay $2, buy your tickets, and join us online on Saturday, January 10th.